spotlight on Bikaji Foods. This counter reported its numbers, and to understand what the outlook is for FY27, we are now joined by Mr. Manoj Verma, COO, and Rishabh Jain, CFO at Bikaji Foods, who are now joining us. Gentlemen, thank you for taking your time out and joining us here on ET Now. Mr. Jain, I would like to come to you first, and let's talk about volume growth. It was very strong at about 16% in the fourth quarter. How sustainable is this number as we head into FY27 with crude volatility still continuing to remain at play?
Thank you very much. So largely in last 6 months, we did two big campaign, which has helped us in overall giving a good volume growth. And this year we continue to stay momentum. And we want to grow our business at overall 15 to 16%. That's our overall target what we're taking. And from volume perspective, of course, we have seen a good price rising across all raw material and packing material. So volume growth should be around 11-12%.
Okay, and this volume growth for 11-12%, Mr. Jain, are you guiding for quarter one of FY27 or overall FY27?
Overall FY27.
Okay, understood. So that's your guidance for overall FY27. Mr. Verma, hi morning. Let's come to you. Help us understand what is the company's hedging strategy on the procurement of edible crude oil requirements. How have you been navigating the kind of inflation that we're seeing in oil prices?
So the oil prices post this war stuff has really been very volatile and moving upwards as well. And this is the heat which most of the organizations are feeling heat. What we have done is that in quarter one, we had to, taking all these price increase in consideration, we have passed these prices to the consumer to a certain extent to protect our bottom line.
Right. Mr. Jain, let me come to you and let's talk about segment-wise performance then. And ethnic snacks and family packs continue to perform very well in the fourth quarter. Which categories are seeing strongest traction currently, and how sustainable is the double-digit growth trajectory in the core snacks business in FY27?
If you allow me to answer this, if we look at in terms of our traditional snacks, which is our core, that's doing very well, and all our inputting also. If we look at in the last 6 months, so the first campaign to gain momentum in Bhujia, we did Bhujia Auto Bikaji. That was one mega campaign what we did and showed wonderful results. Then we did a special campaign for UP market, which was Kya Baat Hai, roping in Pankaj Tripathi in it, and primarily focusing on the traditional snacks. So this is a major pie of our overall business, which is close to 70%, and this would continue to help us driving growth going forward.
Okay. Mr. Verma, you did mention that you have been able to successfully pass on the hike in cost to the end user. Can you quantify what the price hikes have been in the quarter gone by? And as crude continues to stay at elevated levels, you also have laminates cost that has gone up that must have impacted your packaging costs. Talk to us about whether any more price hikes are on the cards from your end.
So we're seeing good increase in packing material as well as edible oil prices, and that's how we are passing the price in first week of April. Till now, I think we have been we have seen big hike in packing material. It has come down a little bit, so we are comfortable with the passing of price. We're not seeing any major price rise as of now.
Okay, and Mr. Jain, what will your capacity expansion plans be? Are you looking to expand across other states and geographies?
So largely, we set up plant across each core and focus market, and we have reasonably good capacity as of now. Thanks to PLI, we have set up plant. We have invested in completed our capex cycle last year. In this year, we don't have any major capex plan as of.
Understood. And also, we've spoken about your raw material prices. We've spoken about laminates. Talk to us about any capex plans that you have for FY27. If at all, how would it be funded, and how much would that add to your total capacity utilization?
So in FY27, we have some very small capex plan, which will be less than 100 crore rupees, and that will be funded through internal accruals. We have good strong cash flow, which is generated from business.
Okay, and Mr. Verma, we understand that the baking business as of now is a very small part of the company. You've also approved further investment in Bikaji Bakes up to 5 crore rupees. Talk to us about what's the outlook for the baking business, and can this become a meaningful contributor to your overall top line, and if so, what would be the timeline here?
So bakery business, or the investment what companies decided to get in, is a futuristic business. So if we look at it in next couple of years, it would not add as much value. But yes, if what we are looking at it is in our strat plan, it is 2030 onwards, you will see that a substantial data would start coming in from this stuff. This business is divided into three parts. So one is will be into premium bread. So that's one. Then second is groceries, and third is cakes and muffin stuff. So three parts of this business, and this would be one of the best in class produce what we are going to get out of this plant.
Right. We do understand that raw material prices have remained very volatile over the last few quarters. You also spoke about price increases, but what could the margin trajectory look like in FY27 given price increase and the consequent passing on of the raw material price that you've spoken about?
So we want to maintain same gross margin, what we're doing. That's the target, what we're taking as of now. So the same gross margin, what we did last year, the same what we want to continue this year also.
Okay, understood. And also talk to us about the incremental demand that you have seen on the back of GST reduction. Namkeens has been a big beneficiary of GST getting cut. A lot of your raw materials have also seen some moderation in prices on that front. Vis-a-vis that, how are you balancing your raw material costs, and how has all of this shaped up demand in Q1 as we speak?
So there's been a story of two halves last year. How we look at it is that pre-GST regime, new regime, and the post one. So the growth post new GST regime has been really very promising, and that speaks about consumer demand and the consumption. If we look at our growths in H1 versus H2, I think that's a testimony of what we say. And this also, the volume growth which you started off from your first question, was also one of the reasons that the benefits we passed on to the consumer. So therefore, that helped us, deliver those kind of volume growths in this the last quarter what we saw.
Okay, on that note, Mr. Verma and Mr. Jain, thank you so much for your time today. Good luck for the quarters to come, and hope to be interacting with you very soon. Thank you so much.
Thank you.
Okay, viewers.